Hello students, good morning now. We will start with this. Today we will now be looking into the other aspects of section 9. In the last lecture, we have discussed about the income being deemed to accrue or arise in India. Under section 911, we are in the first clause which is of section 911, where we have discussed in the yesterday's class that an income would be deemed to have accrued or arise in India if it is in relation to the property or the asset of the non-resident which is situated in India. That is what we have discussed. Therefore, if it is deemed to accrue as in India, accordingly it will be chargeable to tax. See, one thing which is very important, students, the chargeability is the most critical part in this context. So the chargeability is the most critical part which is there in this context. So accordingly, we have considered and we have concluded that if the income is deemed to accrue as in India, then it is chargeable to tax. If it is chargeable to tax, then the payer of the amount, irrespective whether the payer is a resident or a non-resident, payee has to be a resident or a payee has to be a non-resident or a foreign company. Payee, who should be the payee? Payee has to be a non-resident or a foreign company. Okay, payer can be anyone. And therefore, in this particular context, the payer can be anyone, which means that it can be either a resident or a non-resident. And if the payer happens to be a non-resident, then we have discussed this that then the non-resident will be under the non-resident payer would be under the obligation to deduct the TDS irrespective of certain things. We have discussed that. Irrespective of the physical presence of the payer, irrespective of the place of residence of the payer, irrespective of the business connection of the payer. This all leads to one theory. What is that? Irrespective of any territorial nexus of the payer with India. The payee, non-resident or a foreign company, if it is chargeable to tax in their hands, the payer will definitely come under the obligation to deduct the TDS. I hope that all of you are clear with this. Two questions I need to ask you before now we proceed. Question number one. The payee means receiver. So the payee student is a foreign company. That foreign company whose poem is situated in India. And therefore, that foreign company is a resident in India. That foreign company whose poem is situated in India, and therefore what? Therefore, it is resident in India. And if it is a resident in India, then the payer who is making the payment of that amount, say I give you an example, the payer in India, or say any payer who is making the payment to whom? To a foreign company. That payment is in the nature of a professional service. That payment is in the nature of professional service. Therefore, the question to all of you is, the payer who is making the payment, will the payer deduct the TDS under section 195 or under section 194J? Are you aware of 194J? TDS will be deducted for the professional fees for technical service, etc. So, under which section that then the payer is going to deduct the TDS? I already gave you the scenario. There is this foreign company. There is this particular foreign company who is a resident in India because its poem is in India. The payer, maybe the payer is a resident or the payer is a non-resident. That payer is making the payment of the professional fee to this foreign company which is resident in India. Therefore, the payer, will they deduct TDS under 195 or will they deduct the TDS under section 194J? Which section they are going to deduct TDS? One 194J. Okay. Trinath has said from Visakhapatnam. If you remember today, I have taken you through to a particular provision, the transitional provision of CBDT notification. We discussed that, isn't it? And I told you at that time, supposedly there would be a conflict because you are a foreign company. At the same time, you are also a resident in India. So therefore, there will be a conflict between the two provisions. Which are the two provisions? Provision applicable to a resident and a provision applicable to a foreign company or non-resident. So here is a very unique case where a foreign company is a resident. The provision relating to this foreign company, I mean, we have discussed one example, if I can recall, TDS 40AI and 40AIA, I and IA, isn't it? 40AI and 40AIA. Always spell this one. When you have to speak, you speak like this. 40A, don't use the word one. You use 40AI. That small I was there, no? That is an I. Actually, this is also 91I, 91II, 91III, like this you have to spell. So this is how actually you use them. Nevertheless, we will just simplify, but so 40AI was one, the payee is a non-resident or a foreign company. 40AIA, when the payee is a resident. And therefore, if there is a TDS default, the disallowance will take place in the appropriate section. If it is 40AI, 100% disallowance. If it is 40AIA, 30% disallowance. That is what we discussed. So therefore, in this particular context, so I told you in that case that if it is a foreign company to whom the payment was made, but that foreign company is a resident and there is a TDS default. There is a TDS default. So where should I disallow it? 40AI or 40IA? 40AI we should disallow it. That is, the provision relating to a foreign company will prevail over what? The provision relating to a resident. So whenever there is this sort of a clash between a provision relating to a foreign company and the provision relating to a resident, then it is the former, that is relating to a foreign company, that will prevail over the provision relating to resident. And on the same line, on the same analogy, what we say, if the payee of the amount, if the payee in this case, if the payee students in this case is a, if the payee students in this particular case is who? Is a foreign company. But the foreign company is a resident in India because poem is in India. And the payer is making a payment of professional fee. And the payer is making a payment of professional fee. So therefore I told you the question in this case. That is, the TDS that will be deducted, students, the TDS that will be deducted will be under section 195 and not under 194J. If there is a clash between the two, the provision relating to a foreign company and the provision relating to a resident, it is a former that will prevail. I hope that all of you are very clear on this part. This is how the ICI is going to fool you in the examination. Is that clear to all of you, students? Fine, and that exactly is the game. So this is your point number 1. And now in that backdrop, we discuss point number 2. Point number 2, students, is a very thought-provoking question. It may be a premature as well, but I'm taking a chance. Let's see how much evolved that you have been on your 10th class. Evolution of mankind. Charge to tax, chargeable to tax, was the prerequisite for TDS under 195, isn't it? Chargeable to tax was a prerequisite for TDS under section 195, where else you have students, where else you have seen this particular term apart from 195 yesterday. Was there any other place that you have referred this term, charge to tax, chargeable to tax, at any other place apart from 195? It was 61A. Remember that? And what was there in that 61A? That if in the case of a citizen of India, who's notwithstanding anything contained in section 61, in the case of a citizen of India, whose total income other than the income from the foreign source exceed rupees 15 lakh, exceed rupees 15 lakh, and he is not liable to tax, he is not liable to tax in any other country for the reason of his resident domicile or etc. Then he shall be deemed to be resident. Then he shall be deemed to be a resident. Then the phrase liable to tax was explained further. The phrase liable to tax was explained further in this case, isn't it? Now you recall that explanation. What is the page number? 4. 4. C. Definition only. So, in this case, students, in fact, we are discussing this particular part, liable to tax in relation to a person and with reference to a country means that there is an income tax liability on such person. In this case, under the law of that port, in this situation, for the time being in force, and shall include a person who has been subsequently exempted from such liability under that law. So therefore, what is this? How income tax liability means? How they will get the liability? Because of the chargeability. This is, in fact, in the notes also I have, in fact, made a reference of it. Income tax liability, underline that, if you can. Income tax liability, if you can underline that over there in the text itself, if it is okay with all of you. And just about that, that is charge to tax. That is charge to tax. Yeah, the income second line, no? An income tax liability, the second line. There is an income tax liability. That particular phrase, there is an income tax liability. So if you can highlight that phrase, just above that line, what? That is chargeable to tax. Srinath, the books have been dispatched. So you should be receiving the book in a day or two. Okay, now my next question therefore is students. What, supposing, now this is a different point, so just be very careful. Be careful what I'm saying. If you can appreciate this point, you have reached to an advanced level. If you can appreciate this particular point. Okay, these are technical nuances, students, that you have to be looking into it in a practical way. in the examination also. So the point, students, over here is this, that be careful. For the purpose of TDS, what is required is section 195 says that the amount or the sum paid should be chargeable to tax. Okay. Supposing the sum paid is chargeable to tax, but because of some exemption under section 10, that sum is exempted, chargeable to tax, but it is exempted under section 10 in the hands of the non-resident. Question to all of you therefore is whether the obligation of TDS under section 195 will still exist or not in the hands of the payer. The sum is chargeable to tax. However, as per section 10, the non-resident is eligible for an exemption. So, again the question to all of you is whether in the hands of the payer, is he under the obligation still to deduct the TDS, or he is also exempt from deduction of the TDS. Obligation will exist. Students, obligation will exist unless specifically exempted. Because 195 only talks about what? The sum paid is chargeable to tax. That is all of it. And if sum paid is chargeable to tax, whether it is exempt or not, that is not the lookout of 195. 195 says that, look, we will only see whether the sum which has been paid is chargeable to tax in the hands of the non-resident. If it is the case, then Mr. Payer, you are under the obligation unless what? There is a specific provision which provides an exemption to deduct the TDS. In that case, then you are absolved. Now, why I am harping on this point? Because you will find in some provision later on that there are specific provisions which are there which says exemption on the part of the payer for TDS, but only for those specific provisions. There are there. Okay, so always bear this particular point in mind, students, that unless there is a specific provision which provides an exemption to the payer in respect of the obligation to deduct the TDS, the obligation will continue under 195. Because 195 only requires what? That the sum should be chargeable to tax. Just keep this point in mind. Otherwise, what will happen? If you don't appreciate this point, then what will happen? You will end up only reading those provisions as and when it will come and move on like this. The problem is not moving on like this. At that time, you are reading only English. Then, okay, there is an exemption. Like that you will do. And then you move on. And the problem will occur on the last day. What happens in the last day? Then it is a mountain. Then you know, because you have not done this. So everything now needs to be remembered. So first always know the general principle. And once the general principle is known, then see where is the exception. So when you read the provision of exemption for TDS, don't consider that as a general provision. These are the exceptions. Where is the general provision? 195. Is there the obligation to deduct TDS because of the chargeability? Yes. So, the reference in any section relating to what? Relating to exemption to deduct the TDS is an exception to that general principle. Okay. I want all of you to just take a quick note on this and then we will take on to the term business connection. Quickly, students. Note. Section 195. Section 195 creates an obligation. On the payer if the sum paid, if the sum paid to the non-resident or the foreign company, if the sum paid to the non-resident or the foreign company is chargeable to tax. Full stop. Underline the word is chargeable to tax. Next line. The issue under consideration. The issue under consideration is if a sum paid is chargeable to tax. If a sum paid is chargeable to tax, but subsequently exempted, under section 10, in the hands of the recipient, non-resident or the foreign company, then whether the payer will be under the obligation, to deduct the TDS. Question mark. Right in the next line. The obligation on the payer to deduct the TDS under section 195 shall apply once the sum paid to the non-resident or a foreign company is chargeable to tax. To the non-resident or the foreign company is chargeable to tax. Full stop. Therefore, it does not matter that such sum is subsequently has been exempted has been exempted to tax under section 10, has been exempted to tax under section 10 in the hands of the recipient. In the hands of the recipient. Full stop. The obligation to deduct the TDS will continue on the payer, will continue on the payer if you can write, use it some other pen color now for these terms, the term which I am saying it right now, on the payer unless there is specific exemption, to deduct the TDS under any provision of the Act. Underline the word specific, and A should be in capital. Fine, students? Let's now look into this particular point of the term business connection, students. Now, if you would have seen this concept, now the next concept, now there are only two concepts left in 911, but these are the heavy loaded sections. And for sure, now you said, why I am investing so much of the time? Two reasons. Reason number one, sure you are going to get one question from this. Which is how much surety? 99% surety. Okay, 1%, it is a will of the God, always. You have to keep that margin. Therefore, this is kind of a surety. So, in this particular case, this is one heavy loaded section, 1911, it would be there. Point number two, it unleashed a lot of principles, which we are already discussing, and that will help us to really escalate our understanding on the international taxation as we move forward. And no wonder, students, you will not be an examination ready, you will be your interview ready. In all your big four or international taxation, when we used to take an interview, we used to do this particular questions only. That used to be our campus interview round. When I was in EY manager that time, we used to do this only. And we used to have fun, basically, after interviews. A lot of good, we used to never tell the candidate that you are right or wrong. We used to simply have a lot of fun. Full day when we used to do a campus interview, the kind of the answers that we used to get, fantastic. A lot of fun used to be there. Not even letting know the candidate what kind of blunder he has made in his explanation, and then also feel sorry that these are the future, these are CAs which are being unfolded to the economy. So God bless the client, isn't it? So this is one thing which is the dirty. So this is really being very important positive. Now let's come on the term business connections. Here, students, I just would want to make an initial remark to all of you. And the initial remark is, under the income tax law, you are finding the word business connection. Business connection. There is one chapter, students, later on, where you will find a term permanent establishment. Another term known as permanent establishment. This term permanent establishment is used in the double taxation avoidance agreement treaty. The treaty part. if I may just very quickly give a reference, because this will at least will help you to really visualize the things in a proper perspective. If I may, in this case, very quickly, in this case, the term permanent establishment, and here we are using the term, which term? The term is, in this case, is a treaty, business connection. So, in this regard, if I may quickly take you through this one. So, this any double taxation agreement, say for example, between India and USA, very beautiful DTAA. Any students who want to learn the treaty, after the examination, they will read this full DTAA. You will be capable to understand it, but after the examination. Although this is not a part of the syllabus, but yes, all the principle is part of the syllabus. So, India, USA, DTAA is not a part of the syllabus. But the principle which is there in this, in a treaty, is a part of the syllabus. Specific treaty is not a part of the syllabus. But the principles used therein is a part of syllabus. So, in this case, students, herein, primarily when you read this, can you see it's article number 5? What is the term? Permanent establishment. All article 5 of any treaty, they will not use the word business connection, they will use the word permanent establishment. And if you can just have a look over here, what it actually, I'll just make you through the initial remark. Permanent establishment. If you can read this particular part, is it readable? Because only you have to read only this part. That's not great thing. So the term permanent establishment, point number 2, includes especially what? Place of management, branch, office, factory, workshop. A mine, warehouse, finance. Okay, there are lists. But branch, office, factory, workshop means there is some sort of a fixed place which is there. That is permanent establishment. Permanent. So there is some fixed place. Permanent. Fixed place where? In the other country. So I am a US company and I have got a fixed place in the other country. That fixed place can be anything. Could be a place of management, could be a branch, could be an office, etc. etc. That is permanent establishment. Our income tax law uses the term. What is the term which has been used in our income tax law? Business connection. So at one point of time, there would be this versus that. Can be kind of one of the comparison that may happen, but the comparison is absolutely negligible. Very negligible. Okay? But my only why I have told you right now, because whenever they will ask you a question, be careful when you read the question. Explain the taxability under the provision of the Act. Explain what? The taxability under the provision of the Act. In that case, use the reference only of business connection. Because they are talking about taxability under the Act. However, if they put across what? Explain the taxability in the hands of the non-resident without any particular reference to the provision of the Act. It means this, that what happens? That we may have to then use the treaty also, because they have not restricted the question only on the provision relating to the Act. We definitely can use the treaty as well. At that time what? At that time, you may have to see whether it is a business connection or it is a permanent establishment that you may have to use in your answer. So one very critical point, when you read the question, read it very carefully. And what is that? Is the question that has been targeted is required to be answered as per the provision of the Act, or the question talks about the taxability in the hands of the non-resident. Taxability under the Act versus what? Taxability, that's it, in the hands of the non-resident. It's a different ball game altogether. Is that point clear to all of you students? Be very careful on these particular part because this is where ICI has mastered its art to literally manipulate or create illusions in the mind of the examinee. They don't know absolutely how to commit their answer. These are the initial ways to read the question carefully and then move on further. Don't jump. You have to be very careful on this one. Okay? So, this point should be considered, and as and when it will come, I will make you again reminding this fact again and again. Look how the question they have drafted. So those things you will come to know, and at that point of time, you just know the way the questions are being unfolded. Now, on that note, students, we enter into the term business connection. If you see the definition, students, I hope that you would have seen the definition. The definition is in two parts. What is that? Business connection includes versus exclude. That's it. But what business connection means, that we will not tell. Anything which has got a real challenging task, the government doesn't do that. The government wants that let the controversy prevail and let the headache go to the Supreme Court of India. And that is the problem of our judiciary, problem of our laws. Wherever there is a situation where the government should have taken the responsibility in their shoulder to define the things appropriately, they don't define it. They say, no, that we will not define. How can we define? The income is not defined. I told you in the earlier class number 2 or class number 3, income definition. Income what? Includes. Includes what? Specified capital receipt. But what income means? No, that we will not know. That is for the students to decode. Income means what? So therefore we have tried to take that scenario that income means any amount which is derived from the source. If the employment is a source, salary is the income, house property source, rent is income, so on and so forth. That is the general meaning. Then regularity and the certainty. But what it means, so the definition is having a lackluster provision. Here also the same problem is there. What business connection means, they don't tell you. But what it includes, that is what has been given. Or what it excludes. So the first thing before we hit this, the way I taught you the income part, I first told you what income means. Arising from a source. And then we went into what is there in the Act. And what is there in the Act? Specified capital receipt. That is what is the income. Under the law. Specified capital receipt to expand the tax base. To expand what? The tax base. Isn't that our discussion? Isn't it? So that is the point. And that exactly the game plan. Forgotten by now soon. The discussion lecture number 2. I keep on moving. It's not that thing. During the end of the class also, lecture number 2, lecture number 3 will keep haunting you today. That will always be there. Will chase you in this case. Never you'll get a respite. Okay, and whatever I get you through the chargeable to tax, those will again keep moving like a pendulum. Then in that lecture number 28th, 30th and all, again the same thing will come back. So everything will come back again and again in a line. Fine. On that note, let's try to have a very open mind to understand this concept of business connection. Very open mind. Students, think of because you people are learning, think of a case of any multinational company. Any multinational company, think of them. How they enter in India. Take a case study. Think of how Unilever has become Hindustan Lever. That is the point. Coca-Cola USA has become Coca-Cola India Private Limited. This is one part that you should always visualize. How a multinational company comes and do a business in India. First thing, students, you will always notice, so far as this MNCs are concerned, and what exactly it is, you will find on what? So this is India. Okay, and then this is USA. So any particular company, so this particular company say herein X INC dot in USA, resident of USA. What they will do? They will do a transaction with Indian customers directly. So maybe some Indian customers are interested in some of the goods and all product of X INC dot. So therefore, direct sale. That's it. These are the direct sales. So therefore, students, if they are doing a direct sale to a customer in India, my question to all of you therefore is, where the sale has been completed? Where the sale has completed in this particular case? Quickly! Where the sale has been completed? India or USA? Right? Remember Sale of Goods Act? Which was section number? Section 29 or 30. Isn't it? Foundation here. When the sale is completed, when you do the delivery of the goods. To whom? To the transport carrier. When you deliver the goods to the transport carrier, and all the right has flown to whom now? To the buyer. All the right has now gone to the buyer. Na? Once I deliver it, all the right has gone to the buyer. Goods are sold. Goods are sold there. Consider the customs law. In this case, customs law. I'm going to start in November. November maybe end or maybe first week of December I'll start. Customs Act. So, in this case, in the customs law, students, remember this. When a goods are being given to whom? To the person in charge. Person in charge what? Person in charge of the vessel. The captain. Think of it. What happens? The goods are sold. Gone. It is sold. Therefore, for the exporter, students, do you know? For an exporter, please be careful. For an exporter who is exporting the goods, whenever you have to determine the accessible value, what is the accessible value for the exporter? It is at the FOB. What is FOB? On board price. On board means on board. What is the price? On board means when I am putting the goods. What is the price? Whereas here this person is an importer. Here it is an importer. For him, do you know what would be the accessible value? CIF. Cost, insurance and freight. So what happens? Insurance and freight is in whose? Goes to whom? Importer. For the exporter, FOB. What does it imply? Goods are sold. Goods are sold. Sold where? At the time the delivery you have done it to the person in charge. And he gives you the acknowledgement that yes, the goods are being received on board of the vessel. Goods are sold, students. Okay? And hence, in this case, that's the reason why you do the insurance. Headache is not of the seller, headache is of whom? Of the buyer now. So if anything happens to the goods, the buyer will take the compensation. Seller has already sold. The buyer will take the compensation. And that's the reason why insurance is done. Freight, buyer will have to bear it. CIF therefore. Okay, and that exactly the game. So sale has taken place where? In USA itself. Sale is concluded where? In USA. Therefore, sale is concluded in where? USA. If sale is concluded in USA, now you tell me this. Please tell me this. Right now, I am only talking about general principle. Because as we proceed now in the law, some very unusual things you are going to find. Unusual things. But at least before you do the unusual or something which is an exception, You should always know what is the general principle. This is the general principle. So sale is concluded in USA. So therefore, this X INC dot will pay the tax only in USA because sales is concluded in USA. Therefore what? Therefore, tax in USA. Whether Indian government can seek a tax on such sale? No. Why? Sale in USA. No Indian government cannot seek a tax. The connection is not established yet. The territorial nexus is not there with India yet. That connection that we require to tax it, that is not yet established by X INC dot with India. Once the connection is established, only then what? Only then X INC dot will be taxed where? In India. At this stage, because the sales is concluded in USA, therefore that connection is not established. Is that point clear to all of you? Every one of you are clear with this one? So this is the phase 1 which I will say of the company. Phase 1. If you just want to write in a very brief way this particular diagrammatical presentation, but the header is important. What is that? Business connection. General discussion. This is general discussion without going to the specific provision. Business connection, general discussion. And phase 1. Phase 1, USA, India. Very quickly, students, write this. Very, very quickly. Problem is that, students, that if you don't know the backdrop, these provision will literally disturb you badly. Because what? This is a challenge. You don't know the background, you cannot appreciate then the provision. You cannot know the foreground. If you don't know what exactly has happened in the past to lead to this provision, then what happens then? Then you read as if it's a normal provision. That is not a normal provision. What you are reading is an exception. Income tax law is full of exceptions. In fact, 90% of provision is only exception in income tax law. So what is the general provision? Or what is the general principle? We don't know. And because of a lack of understanding what is the general principle, you read the provision as if this is what it is. These are only exceptions that has been put up in the law. General principles are something which is not there in the law. And hence these needs to be decoded. Unless you can appreciate this, you cannot appreciate why this provision is there at first place. The why of the provision you will never come to know. And this why is the most important in the law. Why we are reading this? This why, if you don't know, gone. You will go mad, very near to ATU deduction at the end of it. To save yourself. Okay? Have you read this one, all of you? Copied this? Just write a quick, brief one-liner. XINC dot USA has not established any connection, with India, and therefore has not established any connection with India, and therefore as per the general principle As per the general principle, PLE at the end. I know that you are fond of the principle. Principle PLE. As per the general principle, the income is not taxable in India. Underline the word general principle. Now what happens is, now suddenly ex-ante thought, ex-ante, what they will think, okay, there are some attraction that we are finding it in India towards our product. That is how they will come to, there's some attraction that they are finding it in India about their product. So now they want to explore. So maybe they will introduce a market survey agency in India to find out the interest, potential interest of the customers about their product. So agencies are hired, they take the survey and the survey report goes to them. And now they think that yes, if you are doing a business, you need to take a chance. And being a multinational company, the best way to now go to the other geographies where there is a potential growth that can be seen. One, the initial interest which is shown by the customers from India, and second, corroborated by the market survey, further supplemented by the market survey. So then they open up a branch in India. Then they open up what? A branch in India. So branch in India is now open in this context. Isn't it? A branch in India is open. Like say for example, any mall, you take it in Hyderabad itself, IKEA was the first mall in India. Now we have got IKEA across the other particular parts of India. But the first, you know where it was? In Hyderabad. Are you aware of that? IKEA Sweden. And then from Sweden to Hyderabad. First mall, not mall, what is it? IKEA, the product. IKEA is a store. Isn't it? Yeah. IKEA showroom. So that first showroom they put up in India. Why? They came to know that potential of the Indian customer. Obviously, they would have also done these surveys and all. So now what happens? Now you come to phase number 2. And what is phase number 2? In this case, now xinc.USA in phase number 2, what they do? In this case, in India, students, in this case, they are putting up what? Putting up the branch. And then what students? So from xinc dot, they will supply the goods. They will supply the goods. And then students, what happens? From the Indian branch, they will sell. Sell what? Sell the goods to the Indian customer. Sell the goods to the Indian customer. xinc.USA is supplying the goods to the Indian branch, and from the branch, the goods are being sold to whom? To the Indian customer. That is your phase number 2. That is your phase number 2. Fine. Now you tell me, has xinc dot has established the connection with India? Did they establish the connection with India? And the answer is yes. Now they have established the connection with India. Territorial nexus, everything you can find it out. Now once you establish the connection with India, in that case, whether now the government will have every right to tax xinc dot? Answer is yes. Because they have established the connection with India. Now you tell me this way, okay, because you have established the connection by setting up a branch in India, whether the government, can they tax the world income of xinc dot? By the way, xinc dot is a foreign company still. It is a foreign company, and I will always assume that its poem is outside India, unless I tell you now specifically that its poem is in India. Okay, So, the question again I am repeating to all of you. Ex-INC dot has set up a branch in India. It has established the connection with India, and therefore, can the government now, can they tax the entire income of ex-INC dot? Because you established the connection now. Now you repent your life, entire life. Why you establish the connection with us? Will the entire income of ex-INC dot will be taxable? No. The income only whatever is attributable to that connection. Income, whatever it is, attributable to that connection. Because this ex-INC dot is a non-resident. It is not a resident that you want to tax the entire global income. And if ex-INC dot is a non-resident, then for a non-resident only two categories of income will be taxed, which is that income accrued or deemed to have accrued in India, or the income which is received in India. So therefore, accrued or deemed to have accrued in India, in that context, this is what it would be. Income accrued or deemed to have accrued in India, this is what it would be. So only to the extent of the income attributable to the branch in India, that much portion of the income only can be taxed. Is that clear to all of you? Have you copied this? Just write a note below this. In this phase, ex-INC dot has established the connection by setting up a branch in India, and therefore ex-INC dot is said to have a business connection in India. Full stop. Since ex-INC dot is a non-resident, therefore the income which is attributable to such business connection in India, that is the branch in India will only be chargeable to tax. Under the Act. When you're writing, you stay very focused when you write it, because when I'm giving you any sentence, I'm actually in a deep thought that time. So sentence formation is very critical. I'm not casually giving you the sentence formation. It is after it. A deep thought about proper sentence formation should happen so that it captures the very essence and it is in line with the law. Now I want that you people write this kind of an answers in your examination. Okay. So, so this is what it has been done. So now students, this is what it is. This is what it is students. Fine. So this is phase 2. Isn't it? Now what happens? Now they say, okay, with one branch, they were very happy. Why? With that one branch itself, students, turnover of how much? Say 50 crores turnover. They became very happy with that. You see that with one branch 50 crores turnover and the profit is very high. So you can just see IKEA will then they had think of it. Now, as IKEA was mad, they set up Hyderabad first to just see what is the response. That is, they will also take a calculated risk, or they will come in India and will say 30 branches in India. Let me keep bleeding with losses. Is that the approach? No, they are accountable to the shareholders in this case. So rationality has to be there, even in their expansion, though they may be a profit-making company. So therefore, one branch in Hyderabad, then they thought the response is phenomenal. Let's then get into the business. Now what they would have done, they would have then would have selected which cities now we need to go into it to really foster our sales to the next level. So then they would have done the further market survey to select the cities that they would want their presence to be in India. Now what they are doing, but now they understand the fact, if it is one branch, from USA it is easy to manage that one branch. The branch is only having some employees, manager, that's it. Real show is from USA, the head office. Branch is only managing, isn't it? The factory doesn't have its own brain. It comes from the office, the head office. Same is with the branch. But now if you're thinking of what? 25 branches in India, do you think it is possible for the head office to manage it? This 25 operations from 50 crores, now you are contemplating 1,000 crore business from USA, sitting from USA on a day-to-day basis. You can keep managing this thing? Answer is no. Now you want what? Now you want a proper head and brain in India itself. An independent management, divorce of the head office. Divorce of the head office. And if that be so, then what happens, friends? If that be so, what they will do? In this case, they now enter into the third phase. And what is your phase 3 in this case? This is how the game will happen, friends. What is phase 3? This XINC.USA, which has been there, and this is in India. Be careful. Now this particular, which was erstwhile branch, the erstwhile branch earlier, which was a branch, isn't it? Will now become what? Will now become a private company, private limited company. So Coca-Cola India, private limited. McKinsey India Private Limited, McKinsey, isn't it? Heard of McKinsey? So again a very big multinational company. McKinsey is a multinational consultancy giant. So they are also McKinsey India Private Limited. Whenever you see the board, just see. Don't ignore. Especially the foreign company which is there in India, don't ignore their nameplates. What they are in India. Sometimes you will be surprised to know the branch which was there. Do you know what was the branch? It was XINC dot only in India. This was the branch. Which means that XINC dot of PLC like that, not private limited like this. It means what? That here is the office which is a branch of that. Why? They write XINC dot or XPLC, whatever the company that they are referred as in their jurisdiction, that reference is brought in their office in India. So they are not independent. They are present themselves through a branch. through an office in India. But now what I'm finding Coca-Cola India Private Limited, Pepsi Foods India Limited, etc. etc. So therefore now what they are? Who are you, XINC.USA? You are a distinct person as compared to this private limited company. And who are you? You are a holding company now. They will definitely be what? They will be a holding company, students. This concept is very important because I am going to use this concept in the transfer pricing also. Holding company. And you are Indian, this company, in this case, X Private Limited. I'll write this as what? X Private Limited. So in phase 2, it was XINC dot. The branch was XINC dot. Now this is now no longer a branch. It is a company in India known as X Private Limited. Who are the shareholder? The shareholder is XINC dot USA. And also, do you know how the shareholding would be? 90% shareholders would be like this. XINC dot. But they want to also motivate the management in India, na? So they will give the ESOP. So that these people are motivated. Otherwise, they will not be motivated only in salary. So they also have the ownership stake. The one who is managing the show from India. And that's how they will release the ESOP to them. Anyways, so therefore this is what it is. Now what happens with X Private Limited, as you all are aware, in this case, will be selling the goods. Sell the goods to whom? To the customers in India. To the customers in India. Now, from the sale, in this case, whatever is the profit which arises, business profit, whatever is the business profit that arises for us. Tell me, in whose hands this business profit will be taxable? XINC dot or X Private Limited? In whose hands this business profit will be taxable? It will be taxable in the hands of X Private independent entity. So taxable in the hands of whom? In the hands of, I use the word, be careful, domestic company. Is it a domestic company? Pepsi India Private Limited? An Indian company is a domestic company. Coca-Cola India Private Limited? Domestic company, yes. Anyone who is incorporated in India will be considered as domestic company. So taxable in the hands of a domestic company, X Private Limited. I just use this here for your reference. In this context, 90% shareholders. Okay. And as you know, students, it will be taxed at the rate, taxable at the whatever is the applicable rate to the domestic company. Taxable at the rate applicable to domestic company. What is the rate? I don't want to look into it right now. Fine. The matter doesn't end over here, students. What will be done thereafter? So this is the profit. Then thereafter, this X Private Limited will then do what? Will then pay the dividend income. Dividend income. Do you all agree in this case? In this situation? Isn't it? So now the income of HCO is a dividend income. How deep it will be, students. Remember now? A passive income. Unlike in the case over here where XINC dot had a active income. You would know where I am heading now, but I will not head there. Where exactly I was getting to it, because it will be It will lose the track. I don't want to lose the track over here, but nevertheless, I made the point where I was heading in this case. So dividend is a passive income. Passive income in the hands of whom? In the hands of students. In the hands of students, if you see over here in this context, in the hands of XINC.USA. Will it be taxable in India? Right now you write it. I have not introduced it, but you will know when you read. Maybe tomorrow you will enter 914. At that point of time you will see in this case dividend income. Dividend income is deemed to be accrued in India. Is deemed to be accrued in India if it is received from whom? Received from an Indian company, Indian or domestic company, deemed to accrue. So is XINC dot receiving a dividend income from an Indian company, student? And the answer is yes. Is therefore the dividend income deemed to accrue rise in India? Answer is yes. And accordingly, what we will conclude? Therefore, the dividend received by XINC dot from X Private Limited is chargeable to tax under the Act. This is your phase 3. One more line you can write below. However, now friends, tell me one thing. However, you can write here in the business profit on account of sale by X Private Limited will not be assessed. Will not be assessed in the hands of XINC. As that's it. I will explain it. Fine. So I have given you 3 examples. So 3 examples I have given it to you. Okay. And now you tell me in the 3 examples or the 3 phase, in which example you found a business connection of the non-resident in India? 1, 2 and 3 I told you, no? In this case. Phase 2. When you establish, because you are there in India. Who is there in India? The foreign company. And therefore I told you, see the nameplate in that buildings and all. XPLC, XINC dot, understand it's a foreign company. And one more thing I will tell you. HSBC in India, Citibank in India, now Citibank has made an exit, but Citibank in India, HSBC, who are they? They are a foreign company in India. They have got a branch in India. They have only taken the RBI permission to do the banking business in India. That's it. They have to take only a license. They don't become HSBC India Private Limited. One of the classic examples I am giving it to you. They only take what? Permission from RBI. License from RBI to do the banking business. Therefore, they set up a branch in India. So, HSBC, you have your Citibank, they are on the branches in India. Is that point clear to all of you? Be careful. One thing is going to come. When I'm saying something, I'm going to use it, students. Don't think that I'm just giving an example. Somewhere I'm going to use it in PGBP. This example which I gave it to you of HSBC and Citibank. What you find it in India are the branches in India. Because they have simply taken the permission from the RBI to set up the branch. That is it. Is that clear to all of you? And therefore, this is the point, students, which you have to always appreciate. Can I move forward now? If you all are through. Fine. So yes, you can just write as a conclusion to this entire case study. Therefore, as per the general principle, again underline the word conclusion. Please write conclusion first in your notebook. Conclusion. Underline the conclusion and then you write. Therefore, as per the general principle, PLE, as per the general principle, the business connection is established, the business connection is established by XINC dot, only in phase 2. For the chargeability of business income in its hand. Okay. Now the next line, students, you'll write business connection. Here I'm writing business connection defined under the Act. So above was the general principle, now defined under the Act. Defined under the Act in what way? So this is how they have defined. It excludes and it includes. Business connection excludes and business connection includes. What it excludes? It excludes, students, specific activities. Specific activities in India. Okay, and what it includes? It includes, in this case, dependent agent of non-resident performing what? Performing specified activity. Again the word specified activity on behalf of non-resident, and the second one, it includes two things, and the second one is significant economic presence of the NR in India, which I'll use the word SEP. I want all of you to because well, this might not be saved and then we may forget for the risk of just forgetting na, I'm just putting it over here. The specific wording students I'm just putting it over here for all of you. Just for the risk that it may be forgotten. I don't want to forget this one. Then tomorrow forgot to write it. The language that you will find would be activity confined to. This is the language that you're going to find. Activity confined to. Confined to means restricted to. We'll see in next 5 minutes you will come to know about this language which I'm talking about. Okay. And over here, students, SCP, you will get it. Right now you will not understand. Just copy this one because the structure will be ready. For you, revision will be very easier then. Turnover criteria or the number of users. The number of users in India. So this is the criteria. The turnover criteria or the number of users in India. Okay. For agent, it is not required. Herein, perfect. I've just made a structure for all of this. Now we'll understand one thing one by one. So at least this is there. Otherwise, what may happen? I might forget it. I may forget it, and then we'll know oh, this should have been given to me. Okay. Shall we then come back to our all of you copied on this? Now, see this part now in this context. Let's take one by one because obviously the act is not defining what it is. What it is, we have just explained in our case study before that. What is the business connection? Something which is a physical presence, a permanency, in like a branch in India, isn't it? But your presence, not your subsidiary's presence. If you have a subsidiary in India, then they are two distinct persons altogether. You are not present. A subsidiary present is an independent entity. Independent of you. And whatever is the profit will assess on them, not on you. Yes, when they pay the dividend to you, then that dividend income is what is going to be assessed to you as per another section 914, not in 911. Is that clear to all of you? So therefore, on that note, if I have to say, let's see what is the exclusions in this context. If you can just very quickly, students, read this one out on the exclusions part. Just have a look into it. There are, this is also an exclusion, students. The last one, can you see? License office. Can you just connect the arrow to the license office also? The arrow, I think the arrow is to the 4 boxes. It is going to the 4 boxes. One is to the operation to this one. So the last box also after this, just connect one arrow. And I'll tell you how deep the ICI asks the question. Go through this. Only the exclusion. That is it right now. Nothing else. Who is this? All of you? So in this case, if you see, let's take this one by one. Please highlight the word confined to. Everywhere you would have got this one, no? And that is the reason why I specifically earmarked in your notes which word? Confined to. First of all, there are the 5 specified activities, students, which you all have already taken a note of. There are the 5 specified activities, and in respect of these 5 activities, these activities are confined, means restricted to only that, nothing more. So therefore, the first one, if you see, what do you get, students, over here? Operations which are confined to the purchase for the purpose of export. Think about it. There are many traders who are there in India. Do you know what these people do? They go to Thailand and from there they purchase t-shirts. Bulk t-shirts purchase. And you know what they do? They go through a flight. They will take an Air Asia flight from Chennai to Singapore, to Thailand, Bangkok. Hardly a flight ticket of 5 or 6,000 rupees. They land up over there. Buy t-shirt from the vendor there. How many t-shirts? In this case, 15 kgs or any case the baggages are allowed. So they take 15 and then additional 10 kgs they will buy. So 25 kilos t-shirt they are bringing in India. Each person, 2 persons are going, they bring 50 kg t-shirt. Isn't it? When you go to the market also you buy that t-shirt in kgs. No? Give me 500 kg t-shirt. Isn't it? So therefore, just imagine in 50 kg how many number of t-shirts it would be. Nobody can remove, only we can estimate 50 kg t-shirts are coming in India, and that too in baggage. Obviously, there are some customs rules in this case. Something concept of bona fide baggage, which is there in customs law. Let's ignore that. So 50 kg students, which is there. T-shirt. I have hundreds of t-shirts, or maybe even thousands. I don't know. Per t-shirt, they have got it over there at say 200 rupees. And in India, what they are selling? 1500 rupees. In fact, by selling first 10 t-shirts, they will easily recover their entire flight cost and all the costs. And the balance 900 t-shirts or 1000 t-shirts which they have got, you can just imagine the kind of profit that they earn. 200 rupees purchase landing cost and 1500 rupees is the selling price. Huge profit. Now the Thailand government will say that look, these Indians buying from us at 200, selling in that country 1500, 1300 net is the profit. Don't you think that then the Thailand government will jump into the action and then they will say what? Pay to us tax on this 1300 rupees per t-shirt. Kindly make the payment of tax to us. Tax to us of what rupees? 1300, on 1300 profit. Because it's t-shirt manufactured and then you are also writing manufactured from Thailand on the logo. Pay us. Do you think that these people pay the tax over there? Anyone makes the payment of tax? Nobody will pay the tax. Why? This is the provision. What is the provision? My operation in your country was confined to, what confined to? Purchase for the purpose of export. That is it. I did nothing further. I came there, I purchased it, I exported it. Exported along with me. I also went there. That is what I did in your country. There is no other activity and hence there is no business connection. This is a worldwide law, this exclusion that you are reading. It is not that you will find this exclusion in the Indian Income Tax Act. This exclusion you will find across all the tax laws that you read across the world. Anywhere you read it, you'll find this exclusion. This exclusion that we are just reading right now. So like, take another example. Because Indians are there across the world, and you know the kind of population that we are having in many countries, at least in Europe, UK, US. There was one very unfortunate incident yesterday that happened in US, isn't it? So students, in this case, in India, so for somebody in USA, many people, do you know what these people do? They purchase, students, in this case, what they purchase? A huge amount of, students, they are purchasing a huge amount of what? Huge amount of students, the spices from India, Indian spices, and they take it across outside India. And same spices which you are getting it in India, say for 500 rupees, they're 10 times the price, and people would definitely want it. Huge profit. Can you tax that particular income? Just because you are earning so much of a huge profit, can that income be taxed? Answer is no. It cannot be taxed. Reason now you all are aware. The income cannot be taxed. Why? The activity of that trader was only to purchase that spices for the purpose of export. That's it. He did nothing beyond that. He did nothing beyond that. But if I just escalate this example one step further, I'm just escalating this example one step further, and I now say that no, after this, he is also putting it on display. He is putting on what? On display, student. So now what are you going to say? Now, if he is putting it on display and then thereafter something more, storage and all, so your activity is not only to purchase and export, but to purchase and do some more activities in India. And if that be so, whether you will be getting the benefit of this exclusion, and the answer is no. Your activity should be confined to only purchase for the purpose of export. Is that point clear to all of you? What is the second one, students? Second exclusion, students, that you would have read it. Business in respect of running them on news and all those stuff. And that is what it is. Like Chandrayaan, remember that? Many foreign news channels primarily were there in India to witness this historical event. And therefore, in this context, The question which has been there is, what is the question? That can therefore we say in this regard, quickly students, can therefore we say students in this regard, what? That this exclusion students which you were discussing in this context, business of running them on higher. So obviously there was a lot of viewership that these people also would have got it. Al Jazeera news channel and many across the world, all the news channels, G20 summit. See the events. Many foreign news channels were there in India to capture all this news. G20, they would have then got a lot of viewership. Because of the viewership, that is their income that they will earn. Now, whether India will say, okay, this G20 summit, we will take an opportunity. All the foreign news channels who are now in India, because of that, your viewership will increase, your business will increase. You are a non-resident, pay the tax in India. G20 is a classic example that we can give it over here. So, what is your answer? No, it was only for news. In this case, confined to what? Collection of news for transmission out of India. Newspapers and all are also in this league. The Dawn, the Washington Post, etc., etc. These correspondents were there in India to cover these summits. And then what happened? Transmitted outside India for the to feed their own population in their country. In that case, whether this will be considered as what? As a business connection in India? Answer is no. It will not be considered as a business connection in India. Is that point clear to all of you students? That exactly is the point. What about the next one, students? The next one. The next one, students, as you can see, operations which are confined to shooting of any cinema film. Any cinema film, students. Isn't it? Any cinema film. Have you seen this movie Gandhi? Gandhi movie? 2nd October it comes. See if you can see it in 2nd October. This was an Oscar winning movie. Made by who? Britishers. In fact, the central character, Mahatma Gandhi, he himself is a Britisher. And just see him, you will not even come to know that he is a real or he is a duplicate. That kind of precision. All the shooting locations was in India. Because it was the entire Indian theme. So therefore, they had, this movie went on to win the Oscar. This was a movie which ended up earning the Oscar. It won the Oscar. So obviously, students, you can just see the global particular this thing. A global income, a global huge income in this case. So, looking into that success, the Indian government would have also thought that this much of the income that this person is earning through the father of nation, through all everything which is there was in India itself, shooting, everything was done in India. So, whatever is the income that he has earned from this, they should pay the tax in India. If they do that, then that will be reciprocated equally by the UK government. Why? Many of our producers in India, for their shooting, they are in London. And if that be the case, they will also retaliate. So therefore, we need a peace. So what is that? Peace is this. I will not tax it. You will also not tax it. This is a peace across the world. And every world will have this exclusion. What is that? Operations which are confined to the shooting of any cinema films in India. That is it. Only confined to what? Shooting of. That is it. So only that much of the operation will not be considered as giving rise to business connection. But be careful. Do you know what these people thereafter do? That I'll tell you later on. Was then it will be this thing. That I'll discuss it in royalty discussion. Royalty one section is going to come. So in that case, operations which are confined to any shooting of the cinema films in India. Only this much after the activity, no business connection. But there are some attached conditions. What is that attached condition? That producer is the one who is doing the business. Now, who is the one who is doing the business? Producer. So Mr. Producer, who are you? Producer says, I am an individual. So are you what? A citizen of India? Holding Indian passport? That is an important question to be asked. Okay. So therefore, a citizen of Indian producers, they are shooting family. They may be a non-resident, but you are an Indian citizen. To become a non-resident, we also know it's very easy. Go there and stay outside India for some more days, and then you become a non-resident, and then you keep on family doing all these activities to get the benefit of exclusion. So we will ask you this very important question: are you a citizen of India? If you are, then the benefit of this exclusion will not apply. So you should not be citizen of India. But Mr. Producer, who are you? Producer says, I am a partnership firm. So I'll ask the second question. Okay, if you are a partnership firm, any of your partner, are they a citizen of India or a resident in India? Is my second question to you. Are they a citizen of India or a resident of India is my second question to you. Again, the answer will come from there. No, we don't have any person who is a citizen of India or a resident of India. If the answer is no, then what happens? There is no business connection in India. Third question can come now. What is the third question? That who are you, Mr. Producer? You say we are a company incorporated in that foreign country. Okay. Do you have any shareholder in your company who are citizen or resident of India? The company says, the foreign company says, no, we don't have such shareholders. If that be the case, the benefit of exclusion is applicable. But if any one of the shareholder happens to be a citizen or resident of India, the benefit of this exclusion will not apply. Fine, students? You have read the fourth exclusion? Next exclusion you have read it? I'll put you one question then. ICA question. So students, that question was where that person, that non-resident, he was a non-resident or a foreign company, I don't recall now, whatever it be, but non-resident or foreign company. That person was a merchant trader and he came in India in the specified zone to display what? Uncut diamond. That's it. Okay. So again I am repeating because I was recollecting it. There was this foreign company, non-resident, who was a merchant trader. That merchant trader, non-resident, they came in India in the specified zone for the display of the uncut diamond. Whether the benefit of this exclusion, will it be available to them or not? Whether the benefit of this exclusion, students, will it be available or not? Business of mining is the game, students. Be careful. Merchant traders are not eligible for the benefit of this exclusion. The benefit of this exclusion is who? To whom? One who is doing the mining. What is mining? Extraction from the mine. That person who has extracted those diamonds, uncut raw diamonds, by that activity of mining, and that uncut diamond then he takes, not that he has then supplied to the merchant trader and then merchant trader take it further. No. Merchant trader, like in this case, if you all are aware, first there is a manufacturer, after manufacturer there is a wholesaler, then there is retailer and then consumer. Like that it happens. No? Same way here also. First there is a mining, the one who does the miner, the one who does the mining. Then there are the merchant traders and some retailers, and then finally the consumer. This is a flow over here. So the benefit of this exclusion is applicable only to whom? Only to the one who is engaged in the business of mining of the diamond. Then and only then the benefit of this exclusion will apply. Next slide, students. License office. What is this license office? License office students are meant, I can give you examples, you can relate it more. Highlight the words preparatory and auxiliary services. License office is any office which is engage in what? Engage in the preparatory and auxiliary services. Okay. So if that is what you are doing it, then you are what? You are probably a license office. And if you are a license office doing this activity, just because you are a license office, that is not sufficient. You are a license office and your activity is confined to preparatory and auxiliary. So many of you will say, but what is the preparatory and auxiliary? I'll give you some 2-3 examples, you can relate it. Preparatory and auxiliary is a very basic activity. Basic. Like call center. Many foreign company students have got a call centers in India, and the foreigner picks up that the accent is from an Indian. They know that the call centers, are you an Indian? This customer. This is a US company. The customer is US, but the call centers from whom they are calling it, they are from India. So, is it an auxiliary and preparatory service? And the answer is yes, it's an auxiliary service. The main business they have done it, but this is just auxiliary service. Sales support. This we are just giving a support to all of you through a call center. Isn't it? That is one example. Second, one more example I can tell you. Like a foreign shipping company. They are coming to the Indian ports. And because they are coming to the Indian ports, obviously there are a lot of compliance they have to do. Filing of documents and all. Series of documents has to be filed. Generally the e-filing is done, but still they require somebody who could do the licensing or networking with the authorities who are there in the Indian port. Because these companies, the people are in the ship and the foreign company is in that foreign country jurisdiction. So generally they get some person in India who could do this licensing work. Licensing work with whom? With the customs officials in that port. So that whatever are the documentation requirement and all, that is easily handled and there is a smooth unloading and then dispatch of the ship from the Indian port. Therefore, such offices of the foreign company in India, can it be considered as a licensing office doing preparatory and auxiliary service? This is another example of licensing office doing preparatory or auxiliary services. So I give you the second example. The first example also I told to all of you. What is that call center? Second example is this. I will give you one more example. From an Indian context only, I will give you. I don't know from where these people get the numbers and all. These people from OLX calls up. Sir, you have got any 4-wheelers and you are interested to sell. We said, no. Okay, we say no. But you ask them, yes, we are interested to sell. Okay, sir. He will not then take it forward. He will tell, sir, our representatives are going to call you. He is only going to know whether that customer has it or not, and then price and other procedures and the commission, if any, that this person is not going to take it forward. He just is calling you to take up the elementary information, and then he will pass on to that company. And that company will do what? A target calling. Because now they know the target customer from that elementary hard work which has been done, wherein they will filter all whatever is required, the filtration process. So they will get the filter 2-wheeler, 4-wheeler or whatever it be. So that filtration is done and then they will do a target calling. So this call which you have received, do you have any 4-wheeler, 2-wheeler that you want to put it in OLX? This company which is doing this work is doing an auxiliary services. These are auxiliary services. So obviously OLX will not do it. They would have hired some agency to do this kind of a work. And hence, if I have such agencies in India, who is doing such kind of inquiries. Will I be having a business connection in India? No. That agency, which is considered as a licensed office, is only doing a preparatory. They are preparing for the target calling. They are preparing for the target calling, and hence what? Hence, there is no business connection in India. Is that point clear to all of the students now? But the disguise in the question. And what is disguise in the question? That's the problem of the students. Students try to remember this in this way that, no sir, it is a license office, that they have mentioned license office and therefore we said what? There is no business connection. This is how students remember it. Merely you are a licensed office does not give you the eligibility of this exclusion from business connection. What is further has to be seen is that licensed office, is it undertaking only a preparatory and auxiliary service? If the answer is yes, then and only then the benefit of this exclusion will apply. So therefore, how beautifully the ICI tossed the question in the exam, and what they say? These license office, using the word license office in the question, what they are saying? They are calling the customer, potential customer, discussing the product, discussing the price, negotiating the price. Now, do you think it's a preparatory and auxiliary service, or it's a serious business function? It's a serious business function. In fact, the most important business function, which is of the same, they are now focused to do the contract. You may be named as a license office, but your activity is not of preparatory and auxiliary nature. Although you are named as a license office, but your activity is not preparatory or auxiliary nature, and therefore what? Therefore, you will not be eligible for the benefit of this exclusion. That's the reason why I have given you some catch of the question sometimes. Instead of reproducing the entire question, if you see, you will find like this. Can you see this catch of the question? I cannot accommodate, I have to accommodate all the questions. But I cannot accommodate all the questions in the way it is done. I have every question which are unique. And wherever there are common things which are being there, but I want to highlight something in this, I have done the highlighting through this paragraph reference that you find. What is that? Catch of the question. So in all your module students, you will find this. And therefore, in the entire thing, you have to catch this point. What point? Business connection is there if what? License office also negotiate. Can you underline the word also? Or highlight the word also. License office also negotiates and enters into the contract with the customers in India. Fine, students? Now, as you all know, if the activity was restricted to purchase for the purpose of export, then that would have been fine. Isn't it? If you are doing what? Purchase for the purpose of export, then that is fine. But do you know what the non-Muslim did? They had a branch in India which was purchasing the raw material and exporting to Singapore or to any foreign country. Purchase for export. Now you are happy, sir, in that case the exclusion will apply. Just hold on. Then that raw material which was purchased, like you remember this T is there, TWG. In Singapore, it's a very famous tea, green tea which is there, TWG company. Just search in Google later on, after today, in the office. So therefore TWG tea. Just check this one. This tea is a premium green tea. Sold across the world. Now it's a premium one. Premium. Its taste is phenomenal. I had it initially, earlier days, when I used to like green tea. So the source and procurement is from India, raw material. And then what they do? They do some sort of mixing or coloring, something that they do it in Singapore, and then they make it premium. And then this premium tea is what you find now here in India, in the branded particular like 5-star hotels or so. That's where you find this TWG. Raw material sourced from India, taken out, made something, dumped again back in India. Final product to be sold further. So here is the branch which purchased the raw material for the purpose of export. Till that time you were happy. Why happy? Purchase for the purpose of export. So you thought, sir, exclusion will apply. Hold on. Now what they do in the foreign country? They manufacture, make a final product, and the same branch in India is told to now sell it in India. Same branch is told now to sell that goods in India. Now you tell me, will this be having the benefit of the exclusion of business correction? No. Because the operation is not confined for the purpose of the purchase. The operation is not confined only for the purpose of the purchase of the goods for the export, but it is extending further to the sale function. And hence, the benefit of this exclusion will not apply. Is that what clear to all of you? So these are the catch of the question which we have discussed it. So I just thought of bringing this to your notice. So this is very frequent element you will get, catch of the question, which you need to be just careful about it. Apart from the questions and answers that we all have it in our module. Now coming back to it, so all we have considered this, fine. Now this brings us to the inclusion part. In this case, the inclusion part. So only one inclusion we'll do today. Tomorrow we'll do the significant economic presence, and also we will then hit tomorrow the Vodafone indirect transfer. Okay, so tomorrow will be this particular discussion wherein we are going to hit on that indirect transfer part. So let's finish this particular part today. If you see your chart, what did I told you? Dependent agent is performing any activity on behalf of performing specified activity on behalf of a non-resident. This is in the chart, you will find that, which I made you write. I use the word dependent agent in your chart. But is it written over here? In this provision, do they write dependent agent here? In this pink color chart, have they written anywhere dependent agent? Anywhere that you would have seen that they would have mentioned dependent agent like this, something of that sort? Answer is no. So you will say, sir, from where you have created this term? I have created this term, students, from this initial observation. And what is that? Any business activity carried out by a person. That person is in India, that agent, that person will be an agent who acting on behalf of whom? Who acting on behalf of the non-resident. Who is acting on behalf of the non-resident in this case. So therefore, students, this is what it is. On behalf of the non-resident. So therefore, that person's activity is to conduct. Now, which activity? We'll see the activity. A, B and C. In that A is the only important thing. You will get question only in this. So that person in India is performing the activity on behalf of the non-resident and not in his own account. Not in his independent course of business. He doesn't do on his own account. He doesn't do in his independent course of business. And if that is the case, that person is a dependent agent of the non-resident. Because that person is doing what? Is acting on behalf of the non-resident. That person is acting on behalf of whom? Of the non-resident. And hence, dependent agent. Dependent on whom? Dependent on the non-resident. Now, what is his activity? What is the activity, students? Yes. So students, if you see over here, you see habitually plays what? Cricket? No. Habitually plays the principal role leading to the conclusion of contract. Just highlight the word plays the principal role. This is the only game. Game, set and match. Habitually plays the principal role. Plays the principal role. Which leads to what? Conclusion of the contract. Recent amendment, students, by the way, to bring to your notice. Recent amendment. Not recent of Finance Act 2023, 2020, I suppose. Finance Act 2020. I must therefore tell you what was the position before this. Before this, the provision was what? They used to say that this person in India habitually performs on behalf of non-resident. What? Point number A. Point number A was habitually concludes the contract. Habitually concludes the contract of the non-resident in India. Concludes the contract. Habitually concludes the contract of the non-resident in India. So the role of that agent was to habitually conclude the contract of the non-resident in India. That was the role of whom? Of that agent. Of that agent. That was the role. And now what we are getting it in this context? Plays principal role leading to the conclusion of the contract. So now you are aware what would have been the manipulation that would have happened? Manipulation. Earlier, knowing the fact that the business connection would be established if that agent habitually concludes the contract, do you know what used to be the case? The non-resident used to give a full mandate to whom? To this particular agent in India. Full mandate to this agent in India. Okay, then identify the customer, get into the negotiation mode, freeze the price, deliverable terms, okay, freeze it. But then at the time when the formal contract would be entered, you go out of the scene. We will then enter into the scene. You move on. All the hard work has been done by you, but now you will not do that formal contract with that buyer. Everything you decide free, and then we will enter and formally do the contract where your name will not be there at all. As if it will appear that I am directly selling the goods to that buyer. You are out of the scene. It gives you the impression that this non-resident is the one who has directly sold the goods. Directly sold the goods to whom? To this buyer in India. This person was nowhere. And if you are directly selling, the goods to that buyer in India, then remember phase 1 in our example. Directly sale by that foreign company to a buyer in India. That between person is lost in that formal contract. So no business connection. Phase 1 also there was no business connection. Same thing here also is happening. The person who was there in India who actually did everything. What you did was only formally doing the contract. That's it. But earlier law was, did the agent concluded the contract? No. If he has not concluded the contract, the non-resident does not have a business connection in India. The law got amended now. And what is today's law? Is actual conclusion of the contract necessary? Actual conclusion of the contract by the agent necessary? Answer is no. What has to be seen? What is to be seen is whether what? Whether this agent is playing a principal role which leads to the conclusion of the contract. And if he is playing a principal role which leads to the conclusion of the contract, the non-resident will be said to have a business connection where? In India. Can you do one thing first over here? In this case, principal role leading to the conclusion of contract. Highlight this particular part and then next to that write, what is that you are going to write? Therefore what? Therefore, the actual conclusion of the contract, the actual conclusion of the contract by the non-resident, the actual conclusion of the contract by the non-resident is not relevant anymore. Is not relevant anymore. Okay. Now point number B, students, and C, they are independent. Or by the way, either A, activity A, or activity B, or activity C. It's A or B or C. Any one of the activity undertook by whom? By the agent on behalf of the non-resident, either activity A or activity B or activity C, that will give rise to what? Business connection to the non-resident in India. Okay. But I must tell you that students, you will get only the question from activity A. So this is what is the game changer. This is what is the real thing that has happened. But B and C, at least, let's read it out. So here, what is the activity that that agent is doing on behalf of the non-resident? Here he does not interact with the customer or contracts and all. That is not something he does it. What he does is, he is like a stockist. If you see point number B, who is he? Stockist. What is stockist? Who stock the goods of the non-resident, and as and when the non-resident will tell that deliver this goods to that particular place, he will have to then do the delivery. He will then have to do what? Delivery. As and when the non-resident will say, I'll have to keep on doing the delivery of the goods. That is the role of a stockist. And that is what this particular point number B is all about. So what is point number B, students? Habitually maintain the stock of goods and deliver the goods on behalf of the non-resident. Point number C is habitually securing the order. That is fine. His job is to secure the orders in India. Okay. So therefore, this is what it is. A or B or C. Keep an eye on A only. Because this is where you will get a question. So far the dependent agent is concerned. B, you can just simply write stockist. S-T-O-C-K-I-S-T-S. S-T-O-C-K-I-S-T-S. Stockist. Now comes the next one. Does not include. Have you read this one? Does not include what? Does not include what? So, if you are having what? An independent agent. That exactly the game. And that's the reason why I told you dependent agent will give you rise to a business connection. Independent agent will not. Why? What is independent agent? A person who does not act on behalf of you. This is what is independent agent. A person who does not act on behalf of. Behalf of whom? Behalf of non-resident. So now you know the difference between the two. Independent agent versus the dependent agent. Now I'll give you what are these people, what kind of people they are. So I am an agent in India, students, and you would know many people of this nature. So I am an agent in India. I have got in my shop 10 different goods of the non-resident. I have got in my shop 10 different goods of the non-resident. Now the buyer comes to my shop. Who is coming to my shop? Buyer is coming to my shop. So let the buyer decide. Buyer decide what? Which goods that you want. I will not force the goods on the buyer. Let the buyer decide which goods he wants. So if you are not pushing the goods of the non-resident, then you are not acting on behalf of non-resident. This is not, you are not pushing. Otherwise, any agent will have to push the goods, isn't it? Pushing is what is required. Whereas here what we are finding, this is not a push model, this is a pull model. Pull model means the buyer will pull the goods. Heard of this? In your interest CA something like that was a SM something, push model, pull model. So push means I am pushing it, I am forcing it. Take this only. This is the best. This is push model. Whereas here I have got shop, you can see this 10 goods. Select which you want. Buyer is pulling the goods. This kind of people are independent agents. And if that is what it is, then do you think that the non-resident has a business connection in India? And the answer is no. He is dealing on his own account, not on behalf of me, not pushing my goods. So therefore, in this case, this will not give rise to any business connection to the non-resident in India. I hope that every one of you are clear with this one. And the last paragraph, students, if you see, only so much of the income as is attributable to the operations carried out in India shall be deemed to accrue as in India. That we have discussed. If you remember, we just now discussed in phase 2. Only that much of the profit attributable to the branch. Only that much of the profit attributable to whom? To the branch is what is going to be taxed in India. That is what we have discussed. Can you just write a technical word for this? Only so much of that. Just highlight this and write a technical word. That only so much of the income as is attributable to the operations carried out in India. Write a technical word, profit attribution. What is the word? Profit attribution. This is known as profit attribution. Fine, students. So we are done with this inclusion completely now. Also, we are done with the other particular part, if you all are aware of this one. So now this leaves us to what? To the last one, which is a significant economic presence. I'll use this one, students, in the tomorrow session. But what we will do now to conclude would be question number 3 today. Okay, and then we'll conclude the session. That one, significant economic presence, we'll do it tomorrow. Okay, and then there is one more case study which will be there. This is done. Then we start. In fact, next 10 minutes or so in the tomorrow session, we'll be in a position to start with indirect transfer, that Vodafone judgment which I was talking about. Let's see question number 3. Read the question, all of you. Question number 3, page number is 31. Do this one. So this is what it is. So far as question number 3 is concerned. So obviously you would have seen in this case, the activity is confined to their activity is confined only to shooting of the cinema film to be put up across in the foreign country. That is it. They did anything else. Now they have given the right. That's agreed to the government, but that is not their activity now. The government would want to telecast it. They are not telecasting it. That is contention number 1. So how you discard? See, one thing is that you are supporting on one activity. See the framework. Reading the answers is the easy thing. But the framework, how to develop the answer is the most important thing. You are not going to write the same answer in this case. So first is that you know that okay, there is an activity which is confined to shooting for export. That is one thing. But then how do I discard that second part? What is the second part? They have given the right to telecast this particular movie in India to the government. So first of all, the 2 points that you can build upon. This is important. Answer is not important. Framework of the answer is important. What is 2 point? 1 is that they are not the one who are exhibiting the movie in India. They have given the right to the government to exhibit. So they are not the one. So they are not doing the activity of exhibiting. It is the government who is doing it for them. Secondly, so far as the amount, so far as the contract of giving the right to the government, from that contract, they are not getting any amount. And because that they are not getting any amount, therefore we can say there is no income which could be considered as have accrued to them in India. This is more important rather than reading the answer. Framework, think that is critical students. If you build up your thoughts, CA final is all about this way. Structure your thoughts. This is how you should visualize your answers. And that's how you will reach to your goal. Otherwise, all the CA final students, what they do, read, okay, understood, yeah, understood. I would have also said it, understood, yeah, understood, you would have also said it, yeah, sir, we have understood. But now you write it, that's where the catch is. You cannot write it. Understanding is one thing, writing is a different ball game altogether. You need to frame it. That framework should be there. Then you write it in your own words. You know? I cannot also reproduce this, but I may be very sure to reproduce a better answer than this. That is possible. So I need to know, one, that yes, what was the activity? Activity was confined to do the shooting for exhibition out of India. That is one thing I will use. And citizenship is also not there. So all whatever is the ingredients of the exclusion is there. Ingredient of the exclusion. Citizen is not there. Resident is not there. But now the problem that has happened to in this question is that right which has been given to the government for exhibition of that movie in India. What to do? Let's discard it. You can't ignore it. If you ignore it, gone. Your marks will be deducted. How discard it? I discard it in 2 ways. I am not doing it. I gave the right to the government. Government is doing it. I am not doing it. So I am still eligible for that exclusion. And the second one, on that contract which I did with the government, it was free. So there was no income in it. And because that there is no income in it, therefore what? Therefore no income have accrued to me in India and hence not chargeable to tax. Is that point clear to all of you students? That exactly is the game, students. And with this, we are through with one of the most important sessions. Okay? Your ability, students, I can tell you, mark your level primary now, and anyone not in your city, across the country or UAE, whosoever are going to appear for the CA final examination, you are already in the next level. And you get intimidated. But now your responsibility is what? Your responsibility is to ensure you write properly. And therefore, we will not read the answer, we'll try to learn the framework of the answer. How to frame the answer. That is what is the ultimate game. If you can frame your answers, In this case, you need the pointers, how to read the question. Okay, this was part of the question. The game is on. The question would have been very simple over here if the question would have been only 3-4 lines. What is that 3-4 lines? That this is an Indian citizen, resident, and did this activity, and that is it. So what you have said, as per the exclusion, this is what it is. He did this, and therefore, benefit of exclusion. They introduce the complication on the second part, which is compelling you to now think. How do you discard this? And the way to discard this is the 2 pointers which I have created for you, and these are the 2 pointers which is to be considered. Okay, so this is a very high time that all of you students should start into this process. I am not therefore doing this at the end, and if you are not learning in the process, you will never learn. If I do it at the end, this thing, you will feel good, but you will never learn and you will never be in a position to implement it. The premium is what? That you should now have the ability to frame. This, the exercise you do this in this DT will help you in IDT, will help you in auditing paper. Obviously, fine. With the 3 subjects. Because I'm very sure that none of any, unfortunately, they don't teach you how to frame the answer. They only teach you the provision, maybe making you go through what? The case study. And you are comfortable? Yeah, you are comfortable. I am comfortable. Yes, whatever you taught us is there. But now can you write it? And if you cannot write it, everything is great. So students, therefore I will meet you tomorrow now. And the tomorrow meeting would be, first we'll complete that significant economic process. And after significant economic process, students, what is the next point? The next point is the indirect transfer. Okay?